All right, guys. Unemployment Friday, uneventful. We did have a rally. There was some magnets above. So there's three parts to this call or this idea this morning. The first part is that there were some upside targets, an upside magnet of like 95, 96 even. All right, that could draw price up. This is around 9 Central. Second thing was the NASDAQ had so many attempts at resistance that they just couldn't keep holding resistance. I'll show you that in a second. Third thing was order flow, getting through the edge zone that you're going to see on the red edge zone that you're going to see up here. Okay, the resistance. Let me show you all of these that were coming in fact, get rid of these illustrations and blow this NASDAQ chart up. NASDAQ is going to be influential if you trade the S&Ps, right? Look at this. It throws in some edge zone resistance, stops it there, stops it there, stops it there, kind of stops it there, kind of trying to stop it there, stops it here. It's like, how many times do you think that's going to be resistance? The conventional wisdom is people think the more they see resistance, the more it's going to work. It's the opposite. The more you try running through a door, the better chance you have of finally busting through that door. Same thing with a market. So don't for once think that once resistance identified, that's when you want to play it. That's when you want to do the opposite. People get stuck with that. So when you see that the NASDAQ is poised for an upside breakout through this consolidation that it's been having, that it could finally take out some swing highs, that's going to give fuel for an upside trade in the ES. Plus, you have an upside magnet and some selling inventory above that creates some upside. So the last thing you're looking for, one of the things you could be looking for to now qualify the trade is, well, let's just play it. Before I play it, oh, shoot. Now it's going to go back in that chart. But I'll come back in here. Before we play it, you see two reds in here. Two edge zone. Hey, you're going to actually watch it here. You see when it finally goes, it pops through. I'm going to stop that. When you click another chart, it starts replaying that one. Do you see when it finally pops through here at 98 even and finally runs? That's what you're looking. You're not looking for that to happen and then buy the S&Ps. You're anticipating that could happen because of all the resistance and all the swing highs that you had. Okay. So now I got to let this thing load back up. I got to remember that when I click another chart, that's the one that's going to replay. All right, this takes me to real time, and we don't want real time. We want to go back to what we were talking about, and that was 9 o'clock Central. 9 o'clock Central time, right in here. I'm not going to replay it. I'm just going to do it one click at a time. So first of all, this market is just congested right now, right? It's looking for a reason to move. I'm not just going to buy it because it breaches these two reds. I'm not going to buy it just because the NASDAQ blows out their top. Not going to buy it just because there's an upside target. But when you start taking more than one thing that makes sense and you start to overlap them, right there is where your edge lies. The overlap of 2 or 3 good things, not 2 or 3 nonsensical things like we're above relative strength or below stochastics and a 618 Fibonacci. No, 3 things that matter: correlation, order flow, upside liquidity, and a target. Those are all important things. What does it mean when a red edge zone pops in on our chart here? Do you know what it means? That means that sellers came in to defend. Sellers are coming in to defend. They're getting the market to curl back lower here, to curl back lower. I'm anticipating that they're going to either give up or right above it, they're stuck. They're going to have their holy you-know-what moment. Plus, you have all of these rotations. 1, 2, 3. I mean, how many times do you think it's going to hold the top of that rotation? You're just looking for a head start. You're just looking for a reason why it could go up to your target and qualify it. So right above these reds, if we play it, it pops good, rotates back down, shows a green, some buying, defending it, which is what you want to see, and up and away it went to that sell side inventory, which are these pink areas. Now, that's a 2.5 point move. If you want 5 points, 10 points, go trade the NASDAQ. You want 30 points in a 10 handle range, go trade crude oil or something. People don't understand that. Their eyes are bigger than their stomach. You're looking for 1 or 2 point head starts and then looking to see if it could go longer from there. That's the whole point about trading. It's not just about the winners, the losers. It's the locations that get you head starts. That's the definition of a good location. Minimal heat, get you going, and then maybe you're on the team for that big move. If you're trying to predict every time it's going to move, the big move, you're going to miss them. You got 3 strikes. You want to foul tip pitches until you get one you can handle and drive through the infield. Sometimes it drives over the infield and over the wall. But if you're trying to hit home runs, you're not. Anybody who's semi-athletic knows what that means. So make sure you guys are in a position to line up correlations with order flow. If you're using the right tools, you find yourself in better locations. Have a good weekend. I'm pumping this up to YouTube. You guys leave comments if you got questions. Trading Room guys, hang tight.